morning, Venkat. How are you?
Good, Alex. So today we're going to talk about CGT and non-residents. Now, this is a little article, Alex, that you picked up in the Financial Review a little while back.
Yes,
And this was about basically the person who wrote the article was saying, gee, the budget's got nasty surprises for
yes,
expats and
yeah,
Australians who are no longer residents of Australia for tax purposes.
correct.
And
Yeah,
and the fact that they can't get their main residence exemption and they can't use indexation
correct.
from 2027. So, Alex, I've got a croaky voice this morning,
Yeah,
so you're going to have to take this one,
yeah, no problems.
carry the load this morning.
All right,
Um,
no problems, Venkat. All right, so before we start and look at this article, you've got to go back and look at the history.
yeah.
So capital gains, remember, was introduced back in 1985, and everybody,
Mm,
and particularly non-residents that owned real estate in Australia, if they ever sold it, could always qualify for the 50% discount.
mm,
Right out for more than 12 months. And then in May of 2012, the government said, no, bugger this. If you're a non-resident after that date, you'll only get the discount up to the May 2012. And thereafter, any gain that accrues from May 2012 to when you sell it, no discount applies. And
mm,
that's always been the rule.
mm,
Now, when they brought in this new rule in the budget, okay, the rules have always been prior to the budget that we're not in favour of non-residents getting the exemptions or anything. So what they said again in the budget was to say, okay, up to 2027, the
mm.
1st of July, you're still not getting the discount anyhow for a non-resident. And then
Correct.
after that date, for a normal resident, you apply the indexation method,
Mm,
the market value. So if you're never getting the discount, you're never going to get the indexation method as well. And so why people are worried or cried about it, I don't know why. Because you never got a 50%. You're never going to get this either. All right. So that's one of the issues. And then this article, they seem to say, oh, this is terrible. I said, well, go back and learn the history for a start before you comment.
yeah,
Sorry, I
I
shouldn't
think
say,
so.
shouldn't be so rude. But then that's the thing. You can't just look at this. You've got to go back and understand the history of what happened before you comment on what is current. I think that's the favour of a lot of commentators. So
Yes.
it's saying that you're a non-resident and then you miss out on this indexation, all right? And a lot of people say, well, indexation has no real value or benefit anyhow because
Mm,
indexation could be very low. So, they're talking about a lot of stuff that's nothing. The second issue that's not addressed in this article is say,
mm,
if I was a resident and
mm,
I owned a family home and then I went overseas for
mm,
work or whatever, as long as I don't own another family home overseas, I can
mm,
still treat the property in Australia as my family home and I can still rent it out for up to 6 years.
mm,
So, they've got to think about, well, if I then sell it, I'm a non-resident, okay, there may be an issue because we
mm,
may pro rata the capital gain. Because the fundamental approach of the tax office is you're a non-resident, you shouldn't get any benefits for disposal of your property. So they may pro rata the capital gain.
mm.
But if you want to avoid that, come back to Australia and become a resident and then dispose of the property.
That's exactly right. And
So you're trying to, I think people that go overseas are trying to get the best of both worlds to say, look, I go
yeah,
to a country that's got a no tax rate or low tax rate. I want to be a resident of that country and a non-resident of Australia. Fine, your income, if you can prove it, is subject to no tax in whatever the jurisdiction or low tax.
mm,
You got no source income from work in Australia, so you don't have a tax problem.
mm,
Okay, but if you're renting it out or you're going to sell it, well
mm.
then pay the consequences of what happens in Australia and stop.
Exactly.
And that's
Exactly.
my perspective, anyhow. But I think the other point is that also that when you're a non-resident, you've
Mm,
got to prove to the tax office that you are a non-resident. And they
mm,
mention the tests, but they don't actually tell you which ones are relevant. They say here's 3 tests. So that's why I read this article with a grain of salt. All right. And it's not really correct in a lot of things it says. And that's the trouble with articles. They just put them out there. There's never an apology or a retraction later or clarification.
no.
So you've got to
Uh,
be careful.
mm.
So to me, the AFR and articles and journals are just like ChatGPT, but in a written form. So be mindful of that. That's all
Yeah,
I'm saying. Don't
yeah.
believe every word that's written. Or
In
even,
the, yeah, particularly in the press. And look, at the end of the day, they've got to sell newspapers, so they need headlines such as "Budget's got a nasty surprise."
no.
Um,
So
but look, Alex, this is one where I'm in 100% agreement with you because
yeah,
the whole idea
yeah,
behind the whole reason this all started, as you rightly pointed out, was we got to the point we started to say, well, hang on. So if someone, let's say I'll pick a random country, let's say someone from France
Yes.
decides to buy an apartment in Melbourne CBD, right?
Correct.
And then they say, oh, but that's my main residence. They've
Yes.
never been to Australia. They've just owned that property and then they sell it off. They
Correct.
were able to take a main residence exemption.
Yes.
Now, when you think about that, it makes zero sense, doesn't it? I mean,
Yes.
I mean, that's obviously the extreme case where someone who's never been here, has
Correct.
nothing but a financial transaction, but can say this is my main residence and pay no tax when they sell,
Yes.
and make a massive gain. And who's paid for it in the meantime? We've all paid for it through higher property prices.
And when you think about it, if they did buy the property, they're probably not going to sit on it empty. They're probably generating income on it. So without generating income, how could it ever be your family home? So
Exactly.
I think
Exactly.
that also points to that the law and the application of the law by the ATO is pretty weak. Seen this a lot in all these big fraud cases involving GST, etc., where you'd think realistically, if you're a business, if you see the amount that's being ripped off from growing and growing, you sort of think, I better take some steps to remedy this. For instance, GST blowing it to $2 billion outstanding. And so I sort of think, if you're not going to have a strong regulatory system and strong regulator, go for it.
Well, and that's true, isn't it? There are times when you sort of think, gee, how did they not pick something up? But particularly, as you said, if someone's got an income-generating property, but they've never lived in it, how can it be their main residence, as you rightly pointed out? And the other thing also, just as you pointed out, which is that if you were someone who purchased a property after 2012,
correct,
you actually don't get a pro rata discount anyway. You just lose the whole thing.
New rules, which is no discount, cost less proceeds each gain.
Exactly. So what they're talking about in this article seems bizarre, really, because actually a lot of people who might be going away or would have gone away now, what's that? What 2012 is now? 14 years ago? People have not been eligible for the discount for 14 years anyway.
So I think then the article is taking a very narrow point. He says, okay, you bought a property as a resident. You get the CGT discount up to 1st of July 2027, and then you get the indexation. They said, well, what if you go away for 3 months? I said, well, if you go away for 3 months or 6 months, or whatever, you're not a non-resident anyhow.
Exactly.
And
exactly.
Go back and say the ATO, in the mine, and if you go back to the tax law, says we look at 2 years. So if you go
as a minimum
assignment, you can't argue that you're a non-resident. The ATO would just slam you and say, look at this rule. Now you prove you're a non-resident.
Precisely.
Overall chance. So really, the concept should be when you go overseas, how long you've been, and have you made that other country your home? Prove you're a non-resident, then live with the consequences. Okay, if you don't have the gain on the sale, don't sell it.
And Alex, just to kind of take a funny angle on this, it seems to me that it's written by or motivated by people who work in the big accounting firms, for whom, as the article says, it's a rite of passage to go work in London for a little while. Well, bad luck. If you don't want to pay taxes here, don't expect to get subsidies.
I think you also got to be mindful that when the sale was written, look at where house prices are. Why the hell sell? People need to rent, so why not just rent it out or whatever? But why would you sell on a falling market? So what are you worried about?
Exactly. So
it's trying to me, the article, it refers to two accounting practices. So obviously you're trying to drum up business.
I think so. And
people for them to come to you and say, Venkat, can you help me? Don't worry about it. Don't sell.
No, that's right. And Alex, as you would know, I think that the AFR and the Australian and news.com all tend to have a particular point of view against certain governments anyway.
And really, and that's why, again, as I said to you, the newspapers are just, to me, chat GPT in written form. Believe it. And these, I think you need to go back and understand the rules and the history before you make comments about this.
That's right. And I guess what we've been trying to do in our little channel here on YouTube, Alex, is that we've tried to kind of come back to just the basic facts. And sometimes you do have to get a little bit technical. You do have to understand the background of things a little bit. And hopefully what we're doing here is helping people clarify and understand the facts from the fiction. And a lot of the time what we get in newspapers and in the media, and particularly social media, is you tend to get a lot of kind of hype.
Correct.
A lot of sensationalism.
And
But
that's it.
actually, when you peel back the layers and you look at it, you think, actually, when you look at the facts, it's really not that much of a problem. It's really not that serious. It's, crocodile tears a lot of the time.
You're not catering to a large, significant proportion of the population.
Mm.
So that's why the AT says, well, pay you.
Yeah.
You're not 100% of the population or 90% or 80%. So you're a very small portion. So
Very small portion. Much like the superannuation and the 30% on a 3 million. How many people got 3 million in their super? Well, I can tell you, it's about 99% don't.
correct. And
So-
really, you'd say, well, are we so tied up in people that don't have it? And the people say, oh no, but think about in 30 years' time, your super venture could be $3 million. Then you have a problem. To be honest, if it got to 3 million, I'd be happy.
Exactly. And not only that, the common sense will eventually kick in and that number will be indexed in the future. There's no way that number is not going to be indexed in the future.
You look at, as you said, what you have today, the people that have 3 million, very few. But yes, your super could grow, and that's what you want anyhow.
Exactly.
So don't concern about, it's 3 million, or it's indexed, so it could be 5 million by the time you retire.
It most likely will be. So, Alex, maybe you wrap up the video here this morning, but I guess what we've learned is, sometimes you do see articles and you always got to go back and ask the question, does this make sense?
That's right.
Where do I go look for the correct sources of information? And hope,
like we tell our students, don't believe everything you read. You have to read it. You have to understand it. You've got to go back and learn the history.
and hopefully people know where to look, and hopefully people go to reliable sources and find out for themselves. Of course, the ATO website, I think, is always a good place to start because it is the official source of information. But, talk to your tax advisor, talk to people who know the law and know how it works, rather than relying purely on social media or the news in particular.
Yeah, that's right. And I think, talk to old people because they have the corporate memory.
That's why I talk to you all the time, Alex.
Very.
We better finish up on that note then, Alex.
Thank you.
Thank you.
Thanks,
Bye.
mate. See you next time.